So yeah, hi everybody. It's afternoon in the UK. I'm based in Edinburgh in Scotland, so I know it's likely to be morning time for most of you. I'm Keith Pearson. I'm the head of financial services for ServiceNow in EMEA. I've joined ServiceNow only 4 or 5 months ago. I was the head of technology resilience and the ServiceNow program director at Lloyds Banking Group in the UK. Lloyds is the biggest bank in the UK and probably the leading digital bank, one of the leading digital banks in Europe. So we've done a lot of good stuff. We've done a lot of good stuff looking at digital transformation over the last 8 to 10 years. And really, oh, the slides have just gone forward very quickly there. Let me just go back a bit. Yeah, so the first thing really is we have a safe harbor notice that I really just need to draw your attention to anything that I'm about to say, shouldn't be taken in terms of absolutes and forward-looking statements related to products, but it's fairly standard stuff, that. So I think my observation certainly in financial services is that the evolution of digital transformation, if we can call it that, over the last 5 to 10 years, and actually the implementation of technology, all the way back from in financial services, green screens, mainframes, and so on in the early 80s, has led to a very sort of fragmented, disjointed legacy, often on-premise infrastructure estate. And what we've done in the last 5 to 10 years, I think, is we've started to talk about digital transformation. Is we've built an awful lot on top of that. We've taken that legacy and we've tried to iterate and evolve away from that experience, and we've tried to do that to focus on customer journeys, customer outcomes, customer services, customer experiences. It's very difficult, to do that. And I think as a result, McKinsey suggested last year that as many as 90% of digital transformations in financial services face challenges, as many as 20% fail completely. And if I put that in the context of the bank that I was leading digital transformation activity in, that's a significant amount of money that is going down the drain effectively on failed transformation. And in my experience, we were a major bank. We had a commercial banking, retail banking arm, insurance and wealth arm. So we would be what you would call a universal bank. 40 million customers, 125,000 staff. There were challenges and evidence of that digital, what I'd call fragmentation, failed digital transformation, all the way across the back, middle office, the customer channels, and then actually more concerningly than anywhere else for a bank, in the risk control, governance and regulatory compliance space, a kind of two-speed transformation activity happening. And in a bank, in a financial services organization, yes, absolutely, the customer needs to get the best experience they can get. We need to be agile, we need to be responsive, we need to be able to get loans out there quickly, we need to be able to fulfill mortgages quickly. But we need to do all of that in the context of a real compliance and being able to evidence that we're doing it in an appropriate way and that we're treating our customers fairly, and so on. So I'm going to move forward again. So this really just all points towards what I call fragmentation. And I refer to it as digital fragmentation because actually an awful lot of the work that's been done historically through technology vendors has been to solve vertical problems. The HR systems solve the HR problems. The finance systems solve the finance problems. The IT systems for IT solve the IT problems, and so on and so forth. But we've never really had technology that joins all of that up and looks at things horizontally across the enterprise and looks at how, rather than solve in silos, because organizations shouldn't, and from a customer's perspective, operate in silos. We know that they do, but that's not the optimal customer experience. It's a much more integrated and joined up one. We see fragmentation as a result of all these technology acquisitions and overcomplication, in data, in technology, in processes, in policies, and in people. And we know the issues are there. We create shadow IT to try and join things together. We continue to make technology acquisition in a siloed and vertical way. And all that does is continue to contribute to the digital fragmentation. And digital fragmentation does not provide a coherent customer experience, provide a single customer view, and it doesn't provide a single operational view. So there is no single view. The leading banks, and this is a bank that's very, very close to heart, has been driving digital transformation as a priority agenda now for at least 10 years. It probably didn't call it digital transformation 10 years ago, but that's what's been going on. Simplification, alignment to customer journeys, end-to-end workflows, digital platform, mobile first. Around about 2015, we got to cloud first. We talked about things like bank of APIs. We were well on our way to considering microservice architecture instead of monolithic architecture as early as 2014, 2015. And that particular bank now, and as I say, is probably one of the leading banks in Europe from a digital perspective, is now ready to accelerate its way out of its legacy problem. And in the next 3 to 5 years, we will see that bank become a fully integrated cloud-based bank, cloud-based core banking system, everything in the cloud. Now, that's not a journey that it's starting now, as I say. That's a journey that it's now decided, having, if you like, back 2 horses. They evolve and integrate, and they evolve and improve over the course of a number of years out of their way. Start again on a new sheet of paper, which we know a number of digital new banks have done. Lloyds has now made, that bank has now made its decision to move to that next generation position. And that's very exciting, but what that's doing is that's creating 2-speed financial services. So that particular bank is going to outperform, guaranteed, its competitors in this space, in the major banking space in Europe and in the UK in particular, in the next 2 to 3 years. And so, in my view, in the next 3 to 5 years, we will start to see the banks that are able to do this sort of thing and really accelerate away from that legacy environment to and the ones that have not been able to do that. And those ones that have not been able to do that will be split up, they will be fragmented, they will start to, I believe, be sold off for their assets, is the view that we. And for me, starting to think about these things differently, starting to think about customer experience differently requires this sort of layered thinking. At ServiceNow, we think about customer experience not only as that interaction layer, that omni-channel layer, that mobile app, that online channel. We think about it as the interaction layer is only as good as the level of integration of the workflows that underpin it. And the integration of the workflows and a coherent workflow experience across an enterprise is only as good as the data that feeds those workflows. And being able to bring data in from a number of different parts of the organization into single coherent workflow experience is really the key to being able to drive a single customer experience. In financial services and any regulated industry environment, the compliance layer is really important as well. So you can't have compliance being managed and risk being managed off to the side of this digital, if you like, layer cake. You need to have compliance embedded into that. So again, if you look at traditional technologies that solve the problems of GRC or integrated risk management in regulated industry, again, it's just another silo. It's another set of technology that contributes to the fragmentation that needs to be connected. Our view is you can embed all of that into a single coherent platform for the enterprise. Yeah. And so what does that do then in terms of internally in that enterprise, in that financial services organization? Well, traditionally, we see the business unit that's trying to deliver the services and the outcomes to the customer, be it a mortgages business or a payments business or insurance business. It exists and it does its thing to try and improve its NPS scores and make that experience for the customer great. But it does it with all of these other fragmented components out around the outside that assure policy, regulation, 3 lines of defence, operational resilience, business continuity management, you name it. The list goes on and on and on. And in my bank, 10 to as much as 15% of that workforce, 125,000 people, were dedicated to the management of risk and compliance. But it was done around the outside of the business rather than being an integrated thing. For us, we view the future of financial services management flipping that inside out and digitizing it as we go. So we use the business cases that are created in that environment to drive a digitization, not just of workflows, not just of end-to-end experience, but also of compliance, risk, and control management. And by embedding continuous controls monitoring through connected and integrated systems and being driven through, in our case, ServiceNow, we see that we can accelerate the future of financial services from not just an experience perspective, but if you like, a compliance and control perspective as well. Some of you may be well aware of ServiceNow and what ServiceNow is and what ServiceNow certainly has been. It's a rapidly developing platform for the enterprise, very, very powerful, clearly in the IT domain. But those of you paying attention will have spotted that in Gartner quadrants and Forrester waves around risk management, around HR service delivery, around enterprise service management, around project and portfolio, all of these areas we're starting to show up and demonstrate that we've got that great experience. Even in the CRM quadrant, we're now seen as a leader in that space, when I don't suspect it was ever really our intent to be so. And what we've recognized, therefore, is that in the ServiceNow platform, one single integrated platform is the ability to provide a capability to offer that acceleration that I've been talking about for financial services organizations. And so what we've done is we've taken our Now platform, that single platform, single code base, all based in the cloud. We've taken our customer service management capability that sits on top of that, and we built, and in the process of building, a banking data model on top of that. So customer data, transaction data, and reference data using the banking industry architecture network framework. And then on top of that, we're building applications. And the first 2 off the production line this summer are applications for payment operations servicing. We're building that in conjunction with Lloyds in the UK, and card operations servicing. And then what you'll start to see over the coming months and years are a number of very deep and very close to out of the box applications that we can build and will build for financial services organizations. And of course, the aspiration really is to start to remove that fragmentation that I was talking about. The idea being that as the customer makes contact through those channels, comes into the branch or through the contact center, that their case starts to be rooted into those operational servicing areas in the platform. We benefit massively from the fact that we already in many major banks have back office and operational support functions using ServiceNow, and we start to be able to bring the middle office and the back office together with the front office, with that channel. And we talk about being the platform of platforms. So if it's Dynamics on the front end, if it's Salesforce on the front end, whatever it might happen to be on the front end, it might be ServiceNow on the front end, we can still integrate very quickly with those technologies and bring that data in and transact it in workflows and cases in the middle office and the back office there, giving the customer a seamless outcome, giving the bank in that situation a single customer view, and actually starting to give us that single operational view at the same time. And this is not what we will do. This is what we are doing. So as I said, in Lloyds Banking Group today, we're in the process of building out and deploying that payment operation servicing capability onto the platform. We're sweeping up the incumbent technologies that are there. We're removing them and replacing them with ServiceNow. We're replacing the shadow IT. We're replacing the manual steps. And we're, for the first time, building alongside the payment transaction system. So those next generation cloud-based transaction systems that will be part of the bank, we're putting an equivalent servicing, end-to-end servicing system. That means that if you're straight through process on your payment, you make your $1,000 payment to your friend and it does go awry, and you do have that bad experience where it doesn't go through first time, actually the experience of recovering that money, having it back in your bank account, is almost as seamless as the experience would have been of that straight through processing in the first place. So I'm very conscious of the fact that I'm timed out and on to the next speaker, but there's an opportunity for me to field some questions. So happy to do that.
All right. Great. Thank you, Keith. If anybody has any questions, please go ahead and enter them in and we'll go ahead and get those answered. Keith, question for you. You talked earlier in the presentation about everything being in the cloud and, that being a way to really be able to sort of accelerate to, being a next generation sort of advanced bank. Do you think that banks or other companies cannot be innovative unless they are fully in the cloud? I mean, do you think that they can have anything on-prem, or do you have to go full out into the cloud to really be that, innovative next generation sort of, non-legacy kind of company?
I think that's a great question. I mean, we wrestled with that a lot about mainframe in particular. The core banking system is never going to be in the cloud. The mainframe, we are always going to need a mainframe because we need that kind of always on immediate transaction. You're never going to get the pace. You'll get scalability and flexibility in the cloud, but you're never going to get the pace that you would get from the mainframe, from the core banking system, that you need to be able to manage these millions and millions of transactions that are going on. I think that was probably a 3 years ago conversation in Lloyds. So I think certainly our perspective would have been that everything will go to the cloud. And I think the way I've always argued it with people was, what's the world going to look like in financial services? Not in a year's time or 2 years' time or 3 years' time. What's it going to look like in 10 years' time or 20 years' time? Do we honestly still think that we're going to have all of this in the organizations that survive and exist? Are we honestly going to have lots of on-premise infrastructure being managed? Really, are we honestly going to, be having to deal with all of that self-built stuff that's been put in place since the early 70s, and we've been having to manage as the legacy of our technology kind of millstone round our neck all the way through into 2020? I don't think so. So my view would be 20 years down the line that there won't be banks that exist in the way that we would regard it today on premise. I just don't see that at all.
Okay. You had a chart up that looked at the traditional and, sort of future of financial services, and, where you had the business units, sort of making these decisions in isolation, and then, everything's sort of integrated in. How does that functionally change the typical business unit leader's day-to-day life? I mean, as we go into that new mode,
I get it. Yeah. I think so. So if I'm a business operations leader, let's say in card servicing, my day-to-day job is focused on servicing customers. Lost cards, replacement cards, get those cards out there, make sure that people are spending money and so on. And when they don't have the card, they're able to get it quickly. That's what I'm focused on. I'm focused on my customer getting the best experience they can. Then I've got 3 lines of defence sitting beside me. I've got my first line risk officer coming in and saying, well, you've got to make sure that you don't do this. And there's a big risk associated with that. You've got your regulation and compliance people coming in and telling you about the latest policy that's happening. These things are important to your business. It's a core part of your job. Everybody who works in the bank has got a risk and control and compliance remit. So you have to do it, but you don't want to do it in that way. You don't want to do it in a way where it is a kind of overhead to your business and detracts you from focusing on what's important, which is the customer. And that's what I meant by, we want to digitize those capabilities. We want to digitize risk management and digitize controls management. And we believe that, if I looked at Lloyd's, we had of our control set across the entire estate, thousands and thousands of controls. The best we reckoned we could do was automate about 30% of those in the current environment. In the future bank, what we're talking to Lloyd's about is 100% continuous controls monitoring. So risk is managed real time. Dashboards are available that real time give you that view of where controls are breaking, where you need to take action, what the risk is to your business, and so on. And I think, again, that's a play forward my 10 years from now scenario. Do banks still have big Leviathan, 3 lines of defense sitting to the side of the businesses they run? I don't think so. I think those capabilities are embedded into the way that the business works day to day.
And just a very quick question, we only have a few more seconds. Does ServiceNow have agent AI-based solutions to detect or add assets dynamically and show the loads those assets are using?
Wow, that probably requires a longer answer. I think we take that one offline. If you can find out, if you can find, ServiceNow has a lot of intelligence in that platform, right? And particularly around the technology assets and so on. If we're talking about technology assets, I could bore you for the next 5 minutes about how we detect those things and what's going on. But if whoever asked the question could get in touch directly, I'd be quite happy to have that conversation.
Yeah, that's a great idea, great solution, given that we're out of time. Whoever asked that just wants to maybe reach out to Keith and he can elaborate more. So for that,
Keith.Pearson at ServiceNow.com.
All right. So thank you, Keith, for being with us today. And also don't forget, please, to visit the ServiceNow virtual demo room when it opens at 11:25 for your copy of Keith's presentation.